I'll give everybody just a second to take a seat. Welcome to all of you here in person, and hello to everybody out there in cyberspace who I can't see, but I'm thrilled to have people here. My name is Ben Hron. I am a partner in the corporate practice group at Brown Rudnick here in Boston, just on the other side of the channel. And I'm here today to talk to you about one of the most important relationships that you need to develop if you're going to become a successful entrepreneur, the relationship with your lawyer. Now, that may sound self-serving, but the fact is that if your business grows, you're going to end up spending a lot of time talking to your company's counsel, and you're going to end up spending a lot of money on legal services. So my goal here today is to help you better understand the dynamics of the attorney-client relationship and help you develop ways of working productively with your lawyers. Since I'm going to talk in a minute about the importance of experience and expertise in finding a lawyer, I figured it was only fair to actually mention my own. I am, in fact, a lawyer, so that's the check box number one. I have been doing this for about 19 years. Most of my career has been spent working with startups, entrepreneurs, early stage companies at various stages. I've advised thousands of entrepreneurs who are launching, helping them to launch and grow their businesses from inception to exit. I've also worked at a number of different law firms. Brown Rudnick is my fourth large law firm. I also spent a couple of years working as part of a two-person law firm called VC Ready Law Group, which focused almost entirely on representing entrepreneurs as they were launching their businesses. So I've seen the dynamics of an attorney-client relationship in a lot of different contexts. One of the first things you should know about lawyers, if you're not familiar with them, is that almost everything they tell you will come with a disclaimer or a caveat of some sort. A lot of times lawyers will give advice that sounds something like this. If A and B and C are true, then I believe that it's likely that D will happen. This drives business people up a wall, but it highlights some important things for you to keep in mind. One, law is not always black and white. There's a lot of gray area. There are a lot of times where there simply isn't a right answer. Two, it is not the lawyer's job to make the decision for you or to tell you what you can't do. If you're an entrepreneur, what you're doing is inherently risky. So I'm not going to tell you it's too risky for you to do X. What I will tell you is these are the risks to doing it, and I will help you to understand and weigh the pros and cons so you can actually make an informed decision about the business decision you want to make based on those risks. So the presentation is going to be divided into basically the four parts. I'm going to talk about some of the keys to understanding the attorney-client relationship. We'll talk about how to actually find and engage a lawyer, and in particular, when do you find a lawyer? How do you find a lawyer? And what does that relationship look like? What do the terms of that relationship look like? We'll talk about actually working with your lawyer, and particularly how communication in the relationship and trust are really critical to an effective attorney-client relationship. And I'll talk a little bit about the process of attorney billing and how you can budget for it to help you hopefully not have as much problems when you do get the bills. So to work effectively with lawyers, I think there are at least four things that it's important for entrepreneurs to understand that oftentimes aren't discussed. First, the company is the client. seems a little bit disconcerting and frankly, it's tricky because oftentimes we will refer to the CEO of the company as the client needs this. But technically speaking, the company is the client. And the board of the company controls the company's decisions ultimately. At the same time, the primary relationship is usually with the CEO or possibly with the CFO or some other member of the firm, the company's management. At the earliest stages of the company's life cycle, this usually isn't too much of a problem because the CEO is usually the largest stockholder, might be the only board member, and certainly is the one calling the shots. So there isn't a lot of tension there. But as the company grows, if it issues capital, that'll dilute the CEO's interest. If it brings in investors, brings in outside board members, there are going to be other stakeholders that are going to have an interest and that are going to have a say in what the company does. And at some point, you may end up in a situation where there is a disagreement between the CEO, who's often also a member, usually also a member of the board, and the rest of the board about the direction the company should take or a decision the company should take. In that instance, it's important for you to understand that the lawyer represents the company. And at that time, it may be advisable for you to go and get your own counsel. At the very least, you need to understand that what the communications you have with the lawyer are communications that can, and in some cases will be shared with the board. Because that privilege, that attorney-client privilege, runs to the company and not you individually. Second thing to understand is that there is some fundamental misalignment of economic incentives between lawyers and the clients they represent, the startups, that creates some additional tension in the attorney-client relationship at times. Lawyers almost never work for equity. There are exceptions. Some law firms will work for equity, but for the most part, they don't. And there's a good reason for this. You don't want to be in a situation where, say, you're going to sell the company and the lawyer stands to have a big gain if the transaction goes through, but there's some problem with the transaction and you go to your lawyer for advice and your lawyer suddenly has this sort of conflict where he's like, well, geez, if the transaction goes through, I'm better off. So maybe it's not such a big deal if I, encourage them to go in this direction. That conflict is exactly the kind of thing that you want to avoid in an attorney-client relationship. And for that reason, for the most part, attorneys don't take equity. That makes them different from almost everybody who will do work for your business, particularly at the early stages where equity is a key form of currency. So while there are a lot of good reasons for this, it also creates a little bit of a problem. Startups in particular oftentimes don't have a lot of money. And so they oftentimes are asking their attorneys to defer fees, reduce fees, discount fees, whatever, because the company wants to spend it on other things that will help them grow the business. Lawyers will do this a lot of the time. It is a way in which we invest in the companies that we represent. But we don't gain a multiple on that investment if the company is sold. So there is a little bit of a tension there. If the relationship continues, then we stand to benefit. But if for whatever reason the client goes away, whether it's because the client simply shuts down or the client decides to move their work somewhere else, or the client gets sold, that work goes away. And so the lawyer has an economic interest that is much more focused on the short term than the client. This issue is sort of exacerbated by the fact that the client has the ability to terminate the relationship at any time and for any reason. Okay, you may feel some sense of loyalty. You may feel beholden in some ways to your lawyer for any number of reasons. That's great. But you don't actually there's nothing tying you to your law firm other than the fact that you want to continue to work with them. Okay. Again, that is an incredibly important thing for the integrity of the relationship between the attorney and the client, because it ensures that the client isn't stuck with a lawyer that isn't looking out for their best interest. But it does, again, create this situation where the attorney's interest is in making sure that their economics are protected. And that doesn't necessarily align with the company's interest in growth. Now, this is true of just about any attorney-client relationship. So I'm not telling you this because somehow it means that your working relationship with a lawyer is problematic in some way. It's just the reality of the situation, and it's a reality that I think it's helpful for entrepreneurs to understand, and that oftentimes isn't understood by first-time entrepreneurs who haven't gone through the process before, who haven't worked with lawyers before. And when tensions arise in the relationship, I think it's helpful for you to understand where your attorney is coming from, just as I think it's important for your attorney to understand where you are coming from in order to help resolve those issues. The final thing, as I alluded to earlier, is that your lawyer can help you evaluate risks, but your lawyer doesn't make business decisions. Being an entrepreneur is inherently risky. All of you could do something that would be more lucrative than starting a company, at least at the early stages, and a lot less risky, like, say, being a lawyer. What you are doing in starting a company involves a tremendous amount of risk. So it is not on me to tell you, you can't do this. My job is to help you understand those risks so you can make informed decisions. There are instances where I will tell you that the risk is almost one you have to take, where there may be laws that simply are going to be impossible for you to fully comply with. And that is just a risk that is part of doing business. So when do you actually need to go off and hire a lawyer? Well, one thing is if you are basically if you have business dealings with somebody else, another person, another company, that could mean that you have a co-founder that you're doing work with. If you're hiring an employee or an independent contractor, a developer, for example, it could be doing a deal with a supplier. It could be raising capital. It could be putting a product out into the market for other people to buy. Anytime that you are interacting with somebody else, that creates the possibility of a dispute of some sort, which creates the possibility of liability. And that's what lawyers are here to help you mitigate, or at least recognize and try to avoid. The other situation where it's really important to get a lawyer is where you have a valuable asset that you want to protect. For a lot of early stage technology companies and a lot of sort of ordinary mom and pop shops, traditional businesses, that really isn't usually a problem initially, because the assets of the business that are most valuable are really the idea and the people that are executing on it. But for some businesses, for example, life sciences companies that may be doing drug development work out of a lab, or some sort of mechanics business or technology business where you're actually creating a physical product you want to sell, in those cases, it's actually possible that the valuable technology is created before the company is even formed. Once you have that and you know it's valuable, you want to find a lawyer that can help you protect it. So once you've decided it's time to hire a lawyer, how do you go about finding one? This is a little tricky for entrepreneurs and for anybody who's dealing with lawyers for the first time, because legal services aren't like a lot of other services. If you feel sick and you go to the doctor, and the doctor gives you a pill, and you take the pill and you feel better. There's a pretty good chance the pill helped you feel better. And even if it didn't, you can be pretty certain the pill didn't make you feel worse. Legal services don't work like that. If I write a contract, you may never find out if it's any good. The only time you really find out if there's a problem is if a dispute arises between the parties and that contract starts getting scrutinized by somebody else. I've practiced law for 19 plus years. And in those 19 years, I've not had a single contract that I have drafted end up in active litigation. Knock on wood. I've had only a handful of situations in which a deal I've worked on has actually ended up in a dispute. And so far, none of them have focused on something that I've done. Now, does that make me a great lawyer? I'd like to say yes, but the reality is it's hard to know. And because you can't evaluate lawyers in the same way you can evaluate other service providers, you have to look at secondary indicators of value, of quality. One of the key ones is going to be referrals. Referrals from other entrepreneurs, referrals from investors, referrals from advisors. Generally speaking, the referral should be from somebody who's in the same space. It's great to get referrals from your friends and family, but those referrals are probably going to be less relevant than the referrals you get from somebody who is actually looking for somebody and working with lawyers of the same type that you're looking for. The second thing to look at once you've actually got a handful of lawyers that you're interested in talking to is subject matter expertise and experience. Now, general subject matter and expertise, such as works with startup companies a lot, is incredibly important for anybody who's starting a business. Because there are simply certain issues that arise in the early stages of starting a company that it's important your lawyer understand. And it's also important that your lawyer understands simply the economics of working with startups, which is that the long-term value of the relationship is really what you're after. Because in the short term, there's not usually a tremendous amount of legal work, and a lot of that work you end up having to defer fees on or discount fees on, et cetera, right? You want a lawyer that understands that, because you don't want to end up in a situation where the lawyer is basically haranguing you for payment every month. Specific expertise in certain areas, whether it's the industry or specific legal areas, is probably less important, but still a factor to consider. If you're in the cryptocurrency space, it's probably helpful if either the lawyer you're talking to or somebody else at their firm has expertise in regulations of cryptocurrencies. A lot of the time, this is something that is, again, a secondary characteristic, a secondary criteria, but there are probably some areas, some industries in which it is more important. For example, if you're in oil and gas, there's a lot of regulations around oil and gas. You should probably have a lawyer, or at least be at a firm that has someone that works in the oil and gas industry. Another probably undervalued characteristic or criteria is personal chemistry. How well do you get along with the lawyer? It's important that you trust that the lawyer will actually be looking out for your best interest and is interested and frankly personally interested in the growth of your business. The 5 a.m. test is probably the classic example of, you want to make sure there's somebody who will pick up the phone at 5 a.m. My personal experience with this, my best story about this, about 6 years ago, I finished a financing deal for a client the day before my wife and I were leaving on vacation to Italy. The client said, "Thank you very much. You won't hear from me until you get back." 24 hours later, I'm at dinner in Rome with my wife, and the client calls me. I let it go to voicemail. I get a voicemail. Then I get a text. So at this point, I know something's wrong. I spent about 2 hours that evening and about 10 hours over the next several days on the phone from various parts of Italy with the client, with the CEO and the board, dealing with the issue that arose for that client. I could have pushed that work down to somebody else, but it was my relationship. And I knew what kind of signal it would send if I wasn't available at the time they needed me the most. That's something that's hard to judge from your initial interactions with a lawyer, but it is something that you can develop over time if you think you can develop a good working relationship. Finally, rates and rate structure. I'm going to talk a little bit more about that in a second, but I put it at the bottom for a reason. If you are working with a startup, a lawyer that does a lot of work with startup companies, the rates are not actually going to be the critical thing. The lawyer who's interested in developing a long-term relationship with you and your company won't let their fees be an impediment to the growth of your business. And so while it is important to understand the firm's rates, the lawyer's rates, and how they bill their time and how you're going to get charged for work, it's not necessarily the most important criteria. And I wouldn't put it ahead of a lawyer that you think you can develop a long-term relationship with and one that has the relevant expertise. Inevitably, you'll probably have to do some balancing of these criteria when you're choosing a lawyer. If you go with a large firm, they're likely to have all the relevant expertise you need, or at least a lot of it, but the rates are going to be higher. At the same time, large firms often have more flexibility on rates and payment terms than smaller firms do. We'll talk more about that in a second. Smaller firms, lower rates typically, but they oftentimes won't have all the legal services you need in-house, so you may end up having to hire multiple firms in order to get all your legal work done, which could administratively be a problem and can end up being more costly in some ways. Legal fees and payment terms are inevitably one of the biggest areas of concerns for entrepreneurs. So I strongly encourage you to have a frank conversation with whomever your lawyer is, or whatever lawyer you're considering hiring, about their fees and how they deal with startups and payments. Lawyers all have a standard hourly rate that's typically called a rack rate. And most of the time, in the US at least, a lawyer's fees are based on the amount of time the lawyer spends doing the work. Now, I assure you, nobody, least of all lawyers, likes billable hours, likes hourly billing at all. It is no fun at all to keep track of your time in 6-minute increments. Try it sometimes. But the hourly rate developed as a way of providing some transparency to clients as to what the lawyer actually does. In the good old days, the lawyer provides some services, and then you get a bill that said services rendered $500. Well, how'd you get to $500? The client would ask. Over time, because the clients pushed back, lawyers started providing work by the hour and descriptions of what they do during that time as a way of giving the clients some quantitative or qualitative means of determining what the lawyer did to earn the fee. Not ideal, but so far the best system we've come up with. Now, entrepreneurs often want to know whether a lawyer will fix or cap a fee. I can't speak for all lawyers, but personally, I will almost never cap a fee. In a cap fee scenario, we do the work on an hourly basis, and if the bill comes in lower than the cap, you pay the hourly fee. If it comes in above the cap, you pay the cap. That's sort of a heads I win, tails you lose scenario in favor of the entrepreneur. But fixing fees is different because there's potential, it could go both ways, right? If the fee comes in lower than the fixed fee, the lawyer wins. If it comes in higher, the client wins. The tricky part about fixed fees is you have to include a buffer to account for the unknown. Now, for small projects and particularly things that don't require interaction with other lawyers or other parties, that's relatively easy. If I've got a project that I think is going to take me 5 hours to do, I might be willing to fix a fee, assuming that it's going to take me 7 hours, figuring that maybe it takes me 10, but the 7 hours gives me a little bit of a hedge. It gets harder when you're dealing with larger deals or work that involves the other side. If I have a financing transaction that ordinarily I think might take me 30 or 40 hours to do, if I'm going to fix a fee, I might fix that fee, assuming it's going to take me 60 hours to do or 70 hours to do, because I have no idea what the lawyer on the other side is going to be like, or the client on the other side is going to be like. I can't manage that risk by myself. And so I have to build in more of a buffer. The result is that while lawyers will fix fees, because of the need to build in a buffer, oftentimes that fixed fee will end up being higher than what you would have paid on an hourly basis. Sometimes it's worth it for the client to have that certainty, but sometimes it's not. Most large firms, and I think a lot of small firms, will offer discounts on legal fees to startup companies. A lot of them will also offer deferrals, meaning you don't have to pay us for a period of time, though that tends to be less common. And usually, in my experience, it's reserved for situations where either the law firm has a pre-existing relationship with the client, or the client's being referred in by a reliable source, like a venture capitalist, for example. Absent a deferral, firms typically expect payment within 30 days of the bill being rendered. But how strict a lawyer or a firm is in enforcing that really depends a lot on the circumstances. If you're working with a small firm, excuse me, still in my throat. If you're working with a small firm, the revenue that from a month of bills, even if it's relatively small, may be significant to that firm. When I was part of a two-person law firm, every dollar mattered to us. So we weren't deferring fees, and we were expecting prompt payment. When you're working with a larger firm, they have a lot more flexibility. So they may care much less about you paying on time until it gets to the point of the end of the firm's fiscal year. Law firms base bonuses from a fiscal year and salaries for the next fiscal year on revenue collected during that fiscal year. So when you start to approach the end of the fiscal year, lawyers get very insistent on collecting any overdue bills. So one of the things that can be helpful to know as an entrepreneur is when your firm's fiscal year ends, because that'll give you a sense of when you're going to start getting pushed and how much leeway the firm might have. The fee arrangement, payment terms, and other details of the relationship will be set out in an engagement letter that you're required to sign at the start of the relationship. Please read the engagement letter. A lot of it's boring, but it will tell you some things that are important. And you want to make sure that it is consistent with your expectations and what you've been told about the way the relationship will work, including things like the fees, any discounts, deferrals, etc. Once you've hired a lawyer, the most important thing you can do to maintain a productive relationship is keep your lawyer in the loop about developments with your company and about your plans for the future. Keeping your lawyer informed will allow him to help you avoid any pitfalls or obstacles you might otherwise run into, and it will allow him or her to allocate work to the place where it's going to be most cost effective. In other words, staff it in a way that it's done to help reduce the overall legal fees. Both of these things will save you money. Personally, I consider time catching up with a client to be business development and not legal work, so I don't bill for it. Same thing is true of attending most clients' board meetings. Okay? That's an investment by me in my client and in the relationship. I can't say that every lawyer that works with startups does this, but I can say it's pretty common. I'm not unique in this respect. An important and perhaps underappreciated aspect of the relationship between clients and lawyers is the role of staffing. If you hire a lawyer at a firm, it's likely that some of the work, and eventually perhaps a lot of the work, will be done by a lawyer other than the one with which you have the primary relationship. This is a good thing, usually, for two reasons. First, there are legal issues that are going to come up that are beyond the expertise of the lawyer you're working with. I do all sorts of work in corporate governance and contracts and financings and M&A, but I'm not the best person to talk to about patents. I have partners for that, right? So the work needs to be delegated to the person who has the right expertise. Second, as I mentioned earlier, it allows the lawyer delegates the work to the appropriate level within the firm. There's work that can be done more cost effectively by a junior lawyer or sometimes by somebody on our support staff. That, at the end of the day, will save you money. Now, there is a trade-off. I might bill out at twice the rate of one of our associates, but if I can do work 3 times as fast, I'm more cost effective. Sometimes the work will still be done by the junior lawyer, but I'll adjust the bill to take account of that lack of efficiency. Because one thing that we do need to do as lawyers is train our associates. So don't assume that because the work was done by the junior most lawyer that you're necessarily getting a better or worse deal. That's one of the reasons why it is important for you to get to know the lawyers on your team. Understand where their expertise lies, what level they're at. Understand when it makes sense for you to call the junior lawyer for something versus calling the senior lawyer for something, right? That will help you to manage the legal relationship and manage the legal fees. The decision on how to staff work is ultimately going to fall to the lawyer that is actually responsible for the relationship. But clients can absolutely have an impact on staffing by expressing preferences or simply saying, I refuse to work with so-and-so lawyer. That does happen from time to time, and it is your prerogative. When it comes to managing day-to-day legal work, there are a number of things that you can do to help control legal fees. Work with your lawyer to prioritize the legal work. You might have a number of different projects that require legal work at any given time. Your lawyer can help you figure out which ones need to be done now and which ones you might be able to put off for later. Convey your expectations about timing and deliverables. If you absolutely need something tomorrow or today, by all means say so. But if you don't, set reasonable expectations or have reasonable expectations and talk to your lawyer about what to expect. Similarly, if you want a memo from the firm that you'll be able to share with your board or with somebody else, great. But if you're willing to take an email or just a phone conversation, let your lawyer know. Have that conversation. Because what you don't want is your lawyer to produce a tome when all you wanted was a bullet point summary. Try to avoid unnecessary rush projects and don't set artificial deadlines. Having more time to complete work, as I mentioned earlier, will help your lawyer manage the work in a way that'll be more cost effective for you. So if you call the lawyer at the last minute because you just didn't get to it soon enough, or you have a situation and you just say, I have to have it tomorrow, even when you don't, the result of that is going to be that either the partner's going to do it themselves at their billing rate, or they're going to have to find whoever is available. And that won't necessarily be the best person to do it from a cost perspective. You can also work with your lawyers to determine whether there's certain administrative tasks that you can take on internally. For example, managing the company's cap table is something that at some point, once you've got it off the ground and maybe have a system like Carta in place, that they can be done effectively within the company. Or, for example, annual filings that companies need to make with the states where they do business is something that oftentimes can be prepared by the client more cost effectively than the lawyer. And your lawyer can help you figure out what kinds of things might make sense for you to take on internally and at what point. In emergencies, all bets are off. If you have to have something done tomorrow or today, it's going to have to be done by whoever's available to do it. And oftentimes that'll mean the partner that you have the primary relationship with. So understand that in those circumstances, there's not going to be a lot of ways that either you or the lawyer are going to be able to manage the costs. So as much as possible, try to call the lawyer as soon as you realize there's a problem, because the more time you give them, the better it'll be. Even if you have a good working relationship with your lawyer, at some point you will get a bill that you think is too high, or that you simply don't have the money to pay. This is one of those situations where trust and clear communication are really important in the relationship. It can be a little helpful to understand a little bit about the legal billing process. Before you ever see a bill, at the end of the month, the partner in charge, the billing partner, who's usually the partner with whom you have the primary relationship, will get a pre-bill that they'll go through that will list out all of the time entries for all of the lawyers that did work for you during the billing period. And they'll review that, and oftentimes they will write down or write off fees, or they'll decide to provide a discount on the bill. They do this in the interest of maintaining the long-term relationship with the client, because I never want to send out a bill that my client's going to go, oh my God, how did we get there, right? That's never a good thing for the relationship. So I will try to manage a bill to the point where I think it will be perceived as at least reasonable. But there are times where, for whatever reason, I can't or don't do that. Okay. One of the things that comes into play is that there are internal rules about how much flexibility a lawyer has to alter a bill before it requires approval from management. Once you run up against those limits, it simply becomes harder. And in disputes between a lawyer and a client over fees, the lawyer can sometimes end up in a little bit of an awkward situation, or between the client on the one hand and the firm's management on the other. In those scenarios, it's oftentimes easier for the lawyer to either agree to push off collection, defer some of those payments, or give you discounts on future work rather than cut more from the bill that you've got. Because it's always easier if you're giving us more work, if we're doing more legal work for you, it's always easier for me to say, I can give you something back. So in managing the client relationship and managing fee disputes, it's helpful to understand that dynamic. It's also helpful to understand that, not surprisingly, if you don't have a large unpaid bill with the firm and you're pretty good about paying regularly, it's going to be a lot easier to manage those times when you have a problem with the bill. It's going to be a lot easier for you to convince the lawyer and for the lawyer to convince their firm that they should give you a break or that they should write off the fees. It's worth noting that paying regularly doesn't necessarily mean you have to pay the entire bill every month. Working with startups, I understand there are lean months and there are months where you happen to pick up a big customer and there's a lot of money coming in. The consistency in payment is helpful. So if you go a few months where you can't pay the full bill, even paying some amount of it helps to generate that payment history that makes it easier to manage the relationship later on. You should expect that your lawyer's rates will increase annually, typically by about the rate of inflation, maybe a little more. Sometimes the rate increases will be higher than that, depending on circumstances. You should also expect that the amount and complexity of legal work is going to increase considerably as your company grows. It never ceases to surprise me when I see projections, financial projections from startup companies that show a constant rate of legal fees for 2 to 5 years into the future, oftentimes at an amount of like $1,000 a month. It's just not realistic. As your company grows, as you hire people, as you do more complicated deals, you're going to have more legal issues. So plan and budget accordingly. If you present a pro forma financials to an investor that shows them constant legal fees for the next 5 years, they're probably going to think you didn't really think very carefully about it. So it behooves you to be realistic about it. And frankly, it just helps you plan. So I put up on the board a few situations, a few sort of rough estimates on legal fees in different scenarios. Prior to, well, first of all, the initial organization of the company, I usually ballpark it around $5,000. Oftentimes it's less than that, but it's a pretty good rate. And it's a rate that I'm usually willing to fix if you want me to fix it in most situations. Prior raising capital, when the company's sort of just in getting its feet off the ground mode, getting its feet under it. I think I mixed metaphors there. Anyway, usually somewhere around $1,500 a month on average. Some months more, some months it might be zero. Once you've raised capital and you've started to scale, legal fees could be $2,500 to $10,000 a month, depending on how active things are. Okay. Now, again, that's an average. Some months it might still be zero, but just trying to give you a ballpark. For transactions, the legal fees really depend on the complexity of the transaction. For a safe or a convertible note financing, usually pretty straightforward, $7,500 at the low end, typically no more than $20,000, and oftentimes closer to 10. When you get into preferred stock financing, there's more variables, more cost. So you end up usually somewhere in the $20,000 to $35,000 range. As you get further along, more complicated transactions, more parties, legal fees go up. Sale of the company, ballpark 150 to 250, unless it happens to be a very large transaction, in which case the fees can be a lot larger than that. The good news is, if you're selling your company for $1 billion, $500,000 in legal fees isn't really much of an issue for you. We should all be so lucky. Okay, so just a recap on a handful of the tips for working cost effectively with lawyers. It's helpful to understand the dynamics of the attorney-client relationship. It will help you navigate situations where there are problems in that relationship and navigate, frankly, billing issues. When interviewing a lawyer, have a frank discussion about legal fees and budget. It never hurts to ask about deferrals and discounts. You might get it, you might not. Never hurts to ask. Choose a lawyer with ample experience representing startups. There's a lot of issues particular to startup companies that lawyers that simply aren't in the space don't understand and won't be as good at managing. Not least of which is managing the fee relationship with a client that doesn't have the money to pay you. Select a lawyer you believe you could work with for a long period of time, one that you can develop a good relationship with. Get to know your legal team. Keep your lawyer in the loop about what's happening with your business so that they can help you plan for potential issues and avoid pitfalls. Clearly communicate timing and deliverable expectations for all legal work. Try to avoid unnecessary deadlines rush projects and artificial deadlines. Self-help can go a long way. If there's things that you can do internally rather than having your law firm do it, you can oftentimes save a little money. Establishing a regular pattern of payment, paying at least some portion of your monthly bill, will make it easier if there is a dispute over fees later. And keep in mind that lawyers do expect to get paid eventually. And typically, they insist on getting paid when there's a transaction. Usually it's a financing transaction, might be a sale transaction. But they will insist on getting paid. So plan accordingly. If you've run up a big bill with your firm and they've deferred a lot of fees, you may want to build that into how much you decide to raise in your round. All right. I think I'm out of time and I might actually be over time at this point. So I apologize for that. I will stick around here in person for a while outside in the hall if anybody has questions. And for anybody that simply wants to contact me directly, I believe my contact information is available, but you can find me on the Brown Rudnick website, and I'm happy to answer any questions after the fact for anybody who is in the audience. That's it. Thank you very much.